Hello, my name is Benjamin Z. Miller, and I am the managing director of a United Kingdom company, Alamo Mortgage Holdings. Alamo Mortgage Holdings is a company that can pay you a long-term passive income when you purchase our corporate income bond. Our corporate income bonds pay hundreds of basis points over what you might be able to earn on UK gilts and other government bonds. In this presentation, I'll go through how our program works. But first, I'm going to read a very brief disclaimer and excerpt of it. As accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. So we have here an illustration showing the long-term history between the US dollar and the British pound sterling over many decades. And what we see in this table is that the British pound sterling has lost a lot of value against the US dollar. The US dollar has gotten much, much stronger over the decades. If we went back to 1945, towards the end of at the start of the Bretton Woods Agreement, towards the end of World War II, one British pound sterling would buy 4 American dollars. And then if we went to the year 1967, one British pound sterling would only buy $2.40 US. The dollar got stronger. And then if we went to all the way up to January 1st, 2023, one British pound sterling on that date would only buy $1.21 US. And that's real important if you're a UK citizen, if you're a UK accredited investor. Because if you're thinking in terms of what's my percentage rate of return, I'm getting an 8%, for example, rate of return, and that's in British pound sterling, but you could get an 8% return denominated in US dollars over many years, could have a massive difference in terms of the buying power of your gain. So it's important to consider. When purchasing mortgage debt, that is what Alamo Mortgage Holdings does with our bondholders. We sell a bond to UK accredited investors. They receive passive income. They receive mailbox money deposited to their bank account. And then we go and we do all of the work for them. We source packages of mortgages. We buy the mortgages at a discount. We're buying United States mortgages, and there's a big advantage in that because we're receiving payments in US dollars. So we have the ability to diversify currency for one of our bondholders if they would prefer some diversification in their currency. But when we purchase a mortgage note, there's several factors that we look at, and these are factors that any sort of a note buyer should be familiar with. But the first factor is you want to look at who is the person that is guaranteeing the note, the guarantor of the note, or the buyer. You know, if there was a property that was sold and the seller did financing with the buyer over a period of years, the buyer is very important who's guaranteeing the note. The next thing that's important is the collateral. Regardless of how much the note is for, you have to know how much the asset is really worth. The equity, how much skin in the game does the buyer have? So important. More skin in the game equals less risk of default. The interest rate, all other factors being equal, notes that pay higher rates of interest are more attractive compared to notes that pay lower rates of interest. The history of payments. What's the long-term history? Is it a new note that you don't know if the payments are going to be made? Or is it one that you already have 5 years of history to see that the buyer pays all the time on time? And then the paperwork. Was the legal paperwork done properly? Because you want to make sure that you're getting good, solid legal paperwork. Fortunately, you don't have to worry about any of that when you purchase one of our bonds. We do all the work for you. We've got an experienced team. Here's an example transaction that will show more realistically how something like this might happen. Let's say there's a property that's in Texas. This is a real property. It's not one we have in the portfolio, but I show it as an example because it's a nice example. Imagine the sales price is $120,000 is the asking price. Say that the seller finds a buyer that for whatever reason is not able to get a bank mortgage and asks the buyer to be the bank. The buyer has $20,000 down. and the seller agrees, okay, pay me $20,000, you still owe me $100,000, and then you make payments over 30 years at a 10% rate of interest. The buyer agrees, and there's a note created for $100,000, which is at a 10% rate of interest. It works out to monthly payments of $877. Let's imagine 5 years have passed. The buyer is making payments like clockwork, very reliable buyer, but the seller now needs cash. And he asks the buyer, hey, can you get that refinanced with a bank? And then the buyer says, no, I still can't get it refinanced with a bank. So then the seller looks around at companies like Alamo Mortgage Holdings, and he calls up companies or he emails companies and he says, hey, I've got a mortgage note. I am owed $96,574. Can you just pay me $96,574 cash? And that is where the negotiation begins. And let's imagine that the offer came back that we would pay up to a 12% yield. That would be theoretically the highest offer. We could offer as much as $83,000 on that note. If the seller agreed to sell it, that is great news, because that means that we can pay even higher to our bondholders. So that is how that works. Why bonds? Sometimes I'm asked this question, well, why should I buy bonds in an inflationary environment? I need to go get myself some cryptocurrency. If I hear one more person tell me about their crypto portfolio, I'm gonna smile, because I've heard a lot of them doing that, and they all seem to want to get their hand burned on that cryptocurrency stove. They all think they're going to get the next coin that's going to go up 1,000-fold in value, and then instead, when it crashes and burns, they're shocked. Well, bonds have been around a long time. They're a tried and true product. And yes, there's always inflation that's around in the environment, but putting all your money in stocks is not a very smart idea either, because you don't know when the stock market is going to crash. There's some very smart people that have been very wrong predicting when the stock market would crash. So a good strategy, or maybe not a good strategy, I will just comment on Harry Markowitz, who won the 1990 Nobel Prize in economics. And if any of you have accounts at BlackRock or Merrill Lynch or Goldman Sachs, they just love this. They just eat this up. They just eat up the work of Harry Markowitz and his modern portfolio theory. It's the framework on which many of their models are built. And basically, even though Harry Markowitz did some beautiful math and he created some very complicated financial models, when it came to his own personal portfolio, he didn't do any of that. What he would do is just once a year, he'd put half of his money in stocks and half of his money in bonds, and he would adjust it once per year. And that's all that he did. That was his method. Very simple method. If the stocks went up a great deal in value, he would sell stocks and he would buy bonds, and vice versa. If the stock market crashed, he would sell some of his bonds and he would buy more stocks. So very smart man. Why Texas? Why don't we just buy mortgage notes all over? It is good in life to focus on one thing and to be really great at it, to be the best, instead of to be so spread out on so many different things that you're not the best at anything. And we are fantastic at acquiring mortgage debt in Texas. We know the rules in Texas. We have contacts in Texas. We have access to deals in Texas. We've got everything in our favor. The majority of our team in terms of experience is from Texas as well. So that's why Texas. The other thing is Texas is a state that is winning. Texas is a state that people are moving into. When people move to Texas, it makes the value of the real estate higher. And since our financial product is backed by real estate, the higher the value of the real estate, the better it is for our financial product and the better it is for our bondholders. So it is fantastic. What are some of the features? When you purchase an Alamo Mortgage Holdings bonds, we can help you reach your passive income goals far, far more quickly. We offer diversification. You're not just buying one mortgage note, you're buying multiple mortgage notes. We don't charge you any fees. I've heard so many people tell me about, they're so proud of their little index fund. They are so proud of their index fund, and they hold it out like, my index fund only charges this tiny % of a fee. Well, you should be proud of yourself, friends. But instead of a little tiny % of a fee, how about zero? How does zero sound? Does that sound better than a small percentage? Well, when you purchase an Alamo Mortgage Holdings bond, you're paying 0% in fees. We have lower fees than all those low fee index funds. That's something you might want to think about. We also offer flexibility on payments. The team that we've got, I encourage you to look at the team on the website, www.alamomortgageholdings.com. We've got a great team with all of our backgrounds, lots of experience, working hard for you. We've got everybody up on the website. You can check them out. We've got an experienced team that has the experience to work hard for you and do a good job. This is David Jones. He's our in-house counsel for the state of Texas. Fantastic lawyer. Mark DeRuyter's our chief technical officer, and Andrew Richings, he's a UK citizen. He's also the founder of Thomas Kelly Holdings, which is a boutique private consultancy firm that focuses on private equity and fixed income bonds for ultra high net worth and high net worth investors. So a few questions. Why buy the notes? Well, folks, if you want an above average rate of return, you should consider buying the notes. How long term is the note? 3 years, 5 years, all the way up to 50 years. Can you put the notes into your self-invested personal pension? I see no reason that you cannot. If you're not able to, just give us a call. We know a lot of providers that might be able to help you. What type of an investment is it? You're purchasing UK corporate income bonds. Is it a regulated product? No, folks. No, we're not regulated, and that's part of the reason we can pay you so much more money. We've had discussions about going through the regulation process, and we may at some point do that. But right now, we are of the opinion that our investors would rather have the extra income. They would prefer the extra passive income instead of having a lower return and a regulated product. There's lots of regulated products that are out there, but if you want the highest income, you should come see Alamo Mortgage Holdings. Who can invest? Accredited investor, sophisticated investor, charity, trust, business, come one, come all. How's the money protected? Multiple layers. We'll do that on a one-on-one call. Can you invest through a company? Yes. How's the tax managed? We don't deduct anything for the taxes. We pay 100% of the money to you. All of the money goes to you, and then you can decide what's the correct amount you should pay for taxes with your tax professional. Can you get access to the money early? No, we're not set up like a day trading thing. And frankly, that day trading doesn't do any good for anyone. Most of the day traders go broke, they lose money. It's better just to take a position and hold it long term. And while we may not have the allure of being able to gamble those cryptocurrency returns of maybe you'll get lucky and hit the jackpot, at least with Alamo Mortgage Holdings, you've got a solid product that long term is going to be able to pay you and your family income. And that is a huge, huge advantage over gambling for higher rates of return. How can you invest? It's very simple. Just get in touch with us, send us an email, send me an email, ben.miller@alamomortgageholdings.co.uk, or give me a call, +1 for the United States, and then 817-203-4160. I hope that helps, and I wish you good luck with your investing.